What's up guys, welcome back. In this video I'm backtesting the same rejection block strategy that we were backtesting last week. This time it's going to be more refined, but before we get on to the refined model, so I'll show you guys the results of 2 months of backtesting of the previous model over here on TradeZeller. So let's see. So last week's model that we were testing, as you guys can see, I've backtested over 2 months of data for that model. Net PNL on a 50k account, almost 6k, almost 50% win rate, an average RR of 1.5 with a 1% risk on each trade. But then I think this session, like the one that we're viewing right now, that one there with the 6k PNL is the unrefined one, and there's some tweaks that I've made to the model so that it's more consistent and it'll hold. Hopefully it'll hold over time. So I'll just run you guys through the model. So basically it's just a simple no close sweep on a clear liquidity point. If you guys don't know what I mean by that, is basically a clear sweep of liquidity at a point of liquidity where it's quite meaningful. So we're not just taking any random liquidity points. We want the liquidity points to be swept to be quite important ones, like session highs, session lows, which I actually don't have that written down here. Structural points, so like mid-time frame structural points, like simple highs, simple lows, liquidity resting and imbalance, which basically means, and guys, all these points is down to my data that I've collected, which, trust me, I've collected a lot of data, but it's not financial advice at all. But liquidity resting and imbalance, so when wicks are resting inside fair value gaps, especially singular wicks, they tend to be, when they get swept, be points of reversal a lot of the times, depending on the reaction, obviously. Rejection blocks, and if they, so the rejection blocks are when there is 2 consecutive candles with wicks, and with both of them with quite good wicks, basically in between the end of the wicks. That's the rejection block according to my model. You guys you might see that later on when I start backtesting. And finally, relative equal point as well. When there's relative equal highs, relative equal lows, and they get swept all at the same time and they get a reaction off of it, that's quite high probability liquidity points as well. But yeah, so previous model, unrefined, is showing decent strategy, like results. Let's get into the new session. There's a clean session as well, like hasn't been used. Alright, let's see, where is my sessions? Okay, so let's go to, so this is start of the day. Let's go to session, starvation session. Okay, start with a high time frame. Where is price respecting? And guys, we're trying to backtest micro gold futures and SMTs against silver, and we can also take trades on silver if the opportunity is quite good as well. So at the moment we are at a high time frame SMT, very big high time frame SMT. As you guys can see, this high has been swept by silver somewhere here, and we're all the way down here on gold. So technically on the high time frame, gold is a weaker pair. Alright, so let's see. On gold, we've inversed this oldest bearish move, and we have 4 hour lows over here. Sorry guys. And let's drop down. So as it looks like we're respecting the bearish fair value gap, the hourly bearish fair value gap over here, and price could potentially draw into this hourly fair value gap over here. So we're looking bearish at the moment, with this sort of action as well, with the wicks here, high time frame wicks, rejecting from this bearish 1 hour for fair value gap. Okay, let's see. Why does this keep on disappearing? Alright. So let's mark out the liquidity points, such as the structural highs, and structural lows, which is all the way over here, which might actually become our draw on liquidity. Let's see. And guys, I'm going to be backtesting mainly my the times that I trade, which is pre-market, due to me having a full-time job as well. Equal lows go swept. Fuck, I missed that. So equal lows here go swept. Let's take a buy with a no close sweep as well. So hold on. So as you guys can see, we have 1 and 2 highs here, which got swapped with the no close body, and I'll mark that out like here. As you guys can see, the body did not close below the liquidity point. So let's take this trade, and I'm trading on what is it, 2 engulfing candles, which, you know what, my entry should have been actually the previous one on here. So this is technically my model. Sorry for jumping back in time, guys, I wasn't paying attention to this. The next draw on liquidity would be this high. So let's take this trade. Risking 1%. Okay. Buy and journal. This is a 5-minute no close sweep, single engulfing. Do we have an SMT? Not clear, no clear SMTs with silver. Nope. Okay, no SMTs. Break even point. I think the break even point is here. Okay, and this was relative equal point stagger sweat. Okay, let's see how this trade plays out. Bang. Okay. As you guys can see, first win, cool. Okay, on to the next. price still wants to shoot up. No, that would not have been. Oh, relative equal points. No, I think that wouldn't have been a trade. Would that have been a trade? Don't know. I'm gonna skip that one. This is a trade. Limit. And the liquidity sweep is here, guys. As you guys can see. 5 minute no close and engulfing. I think we moved the point to break even now. Okay. That was a break even. Okay, wait, hold on. Let me just get real. So over here was relative equal highs, guys, that got swept. Technically, that should have been a trade over here, according to my model. When this point got swept, we got a very nice rejection, and we could have taken a sell over here, like so, targeting the next draw liquidity, like that. I'm trying to justify if that, really justify if that would have been a trade or not, but I think it should have been, because I've seen, according to my model, I've seen a lot of times where there's when price is wicking like this, and there's the last candle which just swipes all of that points out and reject off of it. So yeah, fuck, that should have been a trade. Hold on, details check. Okay, whatever. Next. Okay, no. Liquidity point rejection. Okay, I think this is a sell. Wait, hold on. Guys, am I tired or what? I might cut this video short, but so on the 15 minute, that was a nice rejection, but then we had this two bullish candles. Okay, let's take this out. It's a nice rejection point. Okay, and target 1+R, target this. Break even over here. Damn, I feel like I'm taking too many trades. I'm not gonna lie to you guys, and you guys probably can see that as well. So, but honestly, like I think all these, so there's the first trade, second trade, and third trade is like it's been valid. It's actually valid, but it's kind of like too good to be true. That was a nice rejection candle though. So it might just be that whenever price is wicking, there's also a point of liquidity to be swept for a reversal. Okay, thanks for watching. I'll be back with another video next week. Probably still be backtesting this rejection block model. So yeah, stay tuned. Thanks for watching. If you guys made it this far, peace.